Hi, everybody. Welcome to today's live OB3 Q&A. I'm Jessica, the Director of Growth Marketing here at Portico. Leading us today is Shauna. I'm going to go ahead and hand it over to Shauna to introduce herself.
Thanks, Jessica. Hi, everyone. Shauna Stewart Mullings here, COO at Portico. Those of you who don't know me have been in the financial aid world well over 20 years, and I'm happy to be here to talk about OB3 today.
And then we have a bunch of our team members here today if we want to go through, and we'll start with Kim. Maybe we just go down the line.
Oh, hey everybody. Nice to see you. I'm Kim Berga. I'm the Senior VP of Managed Services here at Portico. And I'll hand it to Rasha.
Hello, good afternoon, everybody. My name is Rasha Harrison, and I am the Senior Director of FA Processing here at Portico.
All right. Good afternoon, everyone. Armando Rios, Director of Financial Aid Processing.
And I'm Sarah Scott. I'm the FA Compliance Specialist here at Portico.
Awesome. So we have a great team with us today. Shauna's going to kick off with the latest rules update. As you guys know, things have been changing sometimes week to week. What's brewing, and then we'll dive into the questions that everybody submitted.
Thanks, Jessica. So rules are now final. But the question is, are they really final? So if we jump to the next screen, we all got the Federal Register. We all saw the notification that the rules were made final. RISE, that one occurred on May 1st. And that rule included the loan provisions. So all the things about aggregate limit changes, the things about SOAR or less than full full-time credits, all of that stuff is included in RISE. But within that final rule, they made it clear that there would be sub-regulatory guidance to come. We don't know on what sections of RISE there will be sub-regulatory guidance, but the same thing happened on May 19th when AHEAD was finalized. And AHEAD oversees all the Pell changes, workforce Pell, all of those provisions, and the same note was made within those final regs that there will be sub-regulatory guidance to come. So while it was officially final within the Federal Register, we know that there is room for changes to come. And so we'll be staying close to that, but that's something for you all to be aware of. Next slide, Jessica. And so what changed? So at a very high level, within the aggregate limit area, it was clarified that the new lifetime limit included graduate plus loans. In the very early stages, it was said that graduate plus loans would not be included. It wasn't quite clear. Those of you who went to the FSA training in DC, it was also said there that it would not be included, but in the final rules, it actually will be included in the lifetime limit. So our graduate students are really going to be impacted when this kicks in on July 1st. The other thing that was clarified is subscription-based programs. That was kind of left out there. We know non-term was not included in the SOAR schedule of reduction rules, which we're also calling less than full-time rules, same thing. But subscription-based programs was originally left out. Well, it was clarified in the final rules that for the first and second subscription periods, they would in fact be impacted by SOAR. Periods after that, the student would always be considered full-time. So that was new and that was made clear. Additional, they touched on some legacy provision or interim exception, grandfathered. We have so many names for the same thing, but it was clarified that for graduate and professional students who shift programs within the same 4-digit zip code, they would fall into the grandfathered rule. So if they're changing a major, but the zip code is the same, those first four digits, that you could consider them grandfathered in and they would not be impacted with their loan limits. Next slide. Additional things that change, the other financial aid or OFA, in the final rule, again, it made it clear that any funds that could be traced back to federal funding would not be considered OFA. And so why that's impactful is that it would not impact your Pell eligibility. So the state grants, most if not all of them, are traced back to federal funds. Now, the tricky part of this is a portion of some of your state funds are federal funds and other funds are considered state funds. Will they get that granular since, you know, there will be sub-regulatory changes coming out? We're not sure. But as of today, if any of those funds come from the federal government, they will not be considered in the OFA. So think about that when you're configuring your systems. For example, our core financial aid system, we have a flag to dictate which fund source should impact that Pell eligibility. You want to make sure that you don't set your state grant funds as OFA in that calculation. Other things that were made clear for workforce Pell, it's voluntary. That wasn't quite clear all along as we were talking about this. They wanted to make sure it was explicitly clear that workforce Pell was voluntary. Something else that they clarified was for the workforce programs, non-credit or remedial courses cannot be included in Pell intensity. So think about your data when you're calculating Pell intensity or you're sending academic data over to your FA system, which one of those credits should be included and should not be included. It now goes down to the exact type of program. So you really need to talk to your technical folks, your academic folks at your school and make sure that you're thinking about this all the way through. Because a remedial course will count for a program that's not workforce, but it will not for a workforce program. So now you need to dissect it at the program level. So that was a good takeaway to see. Next slide. So now that we've seen the things that change, and there were slight changes really in the final rule, what's coming? What do we see on the horizon? What's being talked about out there? And there are a few things. There most recently, a coalition of 25 states filed a lawsuit against loan limits in OB3. So specifically, when it comes to graduate and professional students and how their limits are changing, nurses weren't included as a professional program. And there are a lot of states and entities out there that think nursing is a profession. They should be allowed to get the higher limit for unsub, and they should be allowed to get the higher 200,000 limit for the aggregate limit. So because of those perspectives, we have these 25 states that have filed a lawsuit. We haven't heard the responses yet, and there could be several responses, and we've seen this over the years. When lawsuits are filed against rules, it could pause the rule from going into effect, or it could roll back the rule, or it could not change anything. So just something for you to pay attention to, be aware of, and we're tracking it as well. But that was the latest, greatest thing that occurred. There are also 3 lawmakers that introduced a resolution to rescind OB3 for the student loan rules. So this now is when it comes to repayment, and particularly with ending the SAVE program. As you all know, the SAVE program helped a lot of students that coming out of COVID couldn't make their payments, and they were put in this program, and a lot of them got 0 payments per month that they qualified for. Now that program is ending. Come July 1st, those students need to move into a different repayment plan. Have you already started having those conversations with your students that are in repayment? But if not, you should. You should start having those conversations, or at least making sure they're aware of what their options are. But you had 3 lawmakers that introduced this resolution. We don't expect it to go through because it would take Congress to pass it, then the Senate, and then the president would have to sign off on it for it to change the rule. But this is the noise that's happening, and these are the conversations that's going on out there. Thirdly, NASFA has submitted their concerns and questions on STATS, and STATS is the Student Tuition Transparency System, which impacts the earnings accountability. So you all know, I'm sure you've all been looking at how are they going to determine earnings of high school graduates, and then compare them to my undergrad students. How are they going to look at bachelor degree students and then compare them to my postgraduate students that are coming out? So what NASFA is questioning in particular, one of the key areas is right now, as the rule stands, it says they're going to base the average earnings or the median earnings based on where the school is located. So if you happen to be a school in an area like California, where you have a high cost of living, then your earnings, average or median earnings, will be higher than most elsewhere in the nation. If your school happens to be in Mississippi or Alabama, where you have a lower cost of living, then your earnings will be lower. So is it fair when you have an online school that could have students across the nation to base the earnings median on where your school is actually located? Those are the things NASFA is challenging and others are questioning out there. You also have the certificate programs like the beauty schools, cosmetology, nails, where you have to have that license. Is that considered an undergraduate program? They're saying it is. And so if it is, what high school earner are you comparing that program to? So those things are in question. And those are some of the concerns that was submitted by NASFA and others. There are others in the beauty area in particular that is pushing back and questioning those things. So depending on how successful they are, those things may change the rules. So more to come on that. In addition to that, the Department of Education, I don't know if you've all seen it, but they've announced webinars for all schools, vendors, everyone else. You should sign up and attend those webinars, ask your questions. They've also published an FAQ and have committed to continuously update those FAQs. So you also want to save that link. Just have it on your browser. You can go in there and go through and see if the question that you have has been answered by the department. It's a good resource. So as Jessica mentioned at the very beginning, we will have links to all of these. Everything I just talked about, we'll share the links to where you can get more detailed information that you can read on your own. So Jessica, I'll pass it back to you to kick off the Q&A.
Awesome. Thank you. We're going to start with one of the questions was just about new loan rules. So less than full-time loans are prorated per academic year or per term. What is Portico's policy regarding disbursements? Will they be split equally across all semesters in the LP, or will they be proportionate to that semester's enrollment?
So I'll take that one. I'll take that first one. So Portico does not dictate how you award at your school. You dictate how you want to award at your school and how you want to treat that SOAR calculation. So what we have done is taken an approach that allows you to have both. So we're trying to balance that line, like thread that needle. And so when the FE is first generated, it will do the proration automatically, and it will evenly split across your 3 quarters or your 2 semesters, that prorated amount. However, if you change the specific term load, then it will recalculate and it will prorate based on that term. So both calculations are within core today. That could change, and we'll notify you ahead of any change. But we did that intentionally because we do not want to make that decision for you at the school. You have that flexibility to choose either calculation, but the default on the funding estimate will be the even split.
Awesome. Thank you, Shauna. The next one we have is, how do we prorate loans for 3 terms? Examples given by the ED show only 2 terms.
I'll take that one. So really the formula for calculating SOAR or SOR, schedule of reductions, it's the same whether you're doing a 2-term academic year or a 3-term academic year. So you want to determine the total SOAR by dividing the number of credits that the student is expected to take over the course of that academic year. You divide that by the number of the credits that are considered full-time for the academic year. And then you convert that number to the nearest total percentage. That's how you get to your total SOR. And then you will just take your maximum sub or unsub amount and multiply it by that SOR percentage. Whether it's 2 terms or 3 terms, you're simply dividing it by 2 or 3, whether you're doing it equally or proportionately.
It looks like a recent ED webinar did have some examples with 3 terms. So our next question is pertaining to the students that are grandfathered into the loan regulations prior to July 1st, 2026. One of the criteria to be grandfathered in is to be enrolled or attending the same program as of July 1st as the prior semester or academic year. What happens if some students have not declared a major when they declare their program in the next semester or year? Are students going to be required to declare a program or major prior to the 1st? And what happens in that situation?
All
Who's
right, I'll
taking
take.
it? Okay.
Oh, go ahead.
Nope.
I'll take that one. Ideally, you want to make sure your students are declaring a program up front. However, if they're not able to, the student would not be eligible in the interim. The main component that you want to consider is that the CIP code would have to be the same in order for them to be under the legacy guidelines. Shauna went over the Grad Plus and the graduate students, but for your graduate students, the main component is that the CIP information would have to be the same. If not, they would not be eligible.
And just to add to what Rasha said, it's those 4 codes at the beginning of the SIP code. Your SIP code is 6 digits. Look at the first 4, and that's going to govern whether they fall under legacy or not. And so if your school allows students not to declare their major, and you know by declaring that major, it's changing that SIP code, you should be strategizing at your school today. You should be talking to your academics today and then reaching out to your students. They may already know and just haven't been declaring. You have until June 30 for them to declare. Once the SIP doesn't change after that June 30 date, they're grandfathered in. So those are the types of conversations you should be having.
Awesome. Thank you. So the next one's loaded. There's a lot of parts to this question. So we'll get through the different parts. So this question is asking about how the One Big Beautiful Bill Act may impact private career schools that are preparing for Title IV federal financial aid eligibility. Specifically, whether there are any new regulations or changes that could affect our plans to expand our medical assistant program to 900 clock hours, how these updates may impact our long-term strategy to become eligible, whether the new legislation would affect financial aid eligibility of future programs as they're developing, including a planned practical nursing program, and then any changes to Pell Grant eligibility, institutional requirements, or reporting obligations for non-degree vocational schools. So in this case, the person asking the question is a school owner. They want to make sure they're making informed decisions before investing additional resources into program expansion, staffing, and regulatory approvals.
Yeah, and I think Dustin also posted in the chat a similar question, and he was the one who
Yeah.
asked it one. So it's multifaceted, the answer, right? Because you're touching on a number of topics there. The first one, let's talk about your clock hour question. The decision whether you want to expand to 900 hours or not. The OB3 loan changes will not impact clock hour non-term programs. So whether you want to increase or stay with the number of clock hours you have today, that's not impacted by the loan proration changes. The Pell changes are the Pell changes, and they'll affect your students whether they're in a 600-hour program or a 900-hour program. So nothing there. OB3 should not impact your decision there. The Pell in itself, newly introduced with OB3, is the SAI of the students. So today, you may not know, because if you're not administering aid today, you may not be getting ISERS today. So you wouldn't know what subset of your students have a fairly high SAI that's still getting Pell. So because of that, I would say it still shouldn't impact your decision because it's an unknown, right? With your LPN question, depending on the structure of your LPN program, there could be significant impact to loan eligibility. But because of the clock hour question before, you might have your LPN program as a clock hour program. And so it may not be impacted. So it just depends. There's unknown here. If it's term-based, then your loans will be impacted. If it's clock hour, they will not be impacted. So that's a takeaway. However, the earnings calculation is something you want to pay attention to, right? What I'm sure you've been paying, having students complete your program as a cash program. They've been getting jobs, and they've been and you have been collecting their earnings so far to date. So you can do some assessment on how much your students are earning after they leave and graduate from your program versus the high school graduates within your area. That would be a takeaway to do some research there. But outside of those things, I don't think, they should prevent you from moving forward with your Title IV eligibility. So I hope that was helpful.
Thanks, Shona. Next one up, are students that received FDSL in 2025, 2026 included in the SOR proration calculations if they are LTFT, or are they grandfathered in?
All right. So first off, the legacy provision does not exempt students from SOR. So all 26, 27 award year direct loan funds are subject to the less than full-time rules. Grandfathered in status, or if they are grandfathered in, does not apply to this specific rule.
Great. Thanks, Armando. Next up, starting July 1st, 2026, loan amounts will be prorated according to the number of credit students are enrolled in. Does that mean that if a student who requested $6,833 per quarter, specific, but only enrolls in 10 credits, 12 credits is full-time, their disbursement loan will automatically be prorated in the Portico system?
Yes. So remember that SOR does apply not only to undergraduate students, but also to graduate and professional students, as well as grad plus if they are legacied in. So you got to keep that in mind. So this particular question seems like it's driven towards the graduate situation. The 6833 is a third of your total overall award of 20,500. So yes, if the student's only taking 10 out of 12 credits in each term, you would do that math. You would arrive at your SOR by doing 30 over 36. That's 83%. And then you would multiply that by the maximum of 20,500. So in this particular example, they'd only be eligible for $17,015 over the course of that full academic year.
We will move on to the next question. So for the part-time reduction of direct loans, does Portico prefer equal disbursement or proportional disbursement, and why?
All right, so I'll take this one. We covered this a little bit earlier as well. So Portico does not have a preference. We want the schools to have that option. When you create the funding estimate originally, it will split the aid equally, but then as you enter each of your disbursements per term, it will do it proportionally. So you have that option to do it equally or proportionally.
Great, thank you. And then the next question was looking for more clarity on loan proration, both equal and proportionate. Also, if a student who is grandfathered in right now but goes on LOA and comes back after the date, do we have to use the OB3 rule?
Okay, I'll take that one. So for the clarification on equal and proportionate loan. So first off, equal disbursement means that you want to take the SOR adjusted annual amount and split it evenly across terms in your academic year. For example, if a student has 2 terms, the approved amount listed on the funding estimate is equally divided across the 2 terms. Proportional disbursement means instead of an even split across the terms, each term's disbursement is directly tied to the student's enrollment intensity. So that is the percentage of credits that they're actively taking in that term. So SOR determines the reduced annual maximum. Equal versus proportionate disbursement determines how that reduced maximum is spread across terms. Portico can support the flexibility, but institutions should document its policy and apply it consistently. And number 2, if a student grandfather, okay, so Title IV approved LOA should preserve a student's OB3 legacy status as long as the student returns to the same program at the same school. If the leave is not Title IV approved, or if the student withdraws, transfers, or changes programs, a student may lose legacy protection and become subject to the new OB3 loan limits. So you have to remember that LOA cannot exceed 180 days in any 12-month period.
Great, thank you, Armando. Next question is, if a student is doing a master's program before July 1st, their maximum loan eligibility is $138,500. But if the student completes the master's program by the next year and goes back to school for another master's program, are they still eligible for that same amount, or will their loan amount max out at $100K?
So let's break this into 2 parts. First, let's talk about the legacy part. So legacy borrowing limits are lost when a student changes programs, whether it's they changed because they graduated from a program, or if in the midst of the program they simply decide to cease attendance and started in a new program. That's when the legacy limits are lost. So when they return under the non-legacy part for that new master's program that starts after July 1, they would have an aggregate loan limit of $100,000 in graduate loans. Remember that $100,000 is for the graduate part of the loans. Overall, they would have a total aggregate limit of $157,500 because that includes their undergraduate borrowing that they might have already had, as well as any borrowing they did in the meantime during their legacy. So overall, they would have a borrowing aggregate limit of 158. Again, $157,500 for the entire career.
Great, thank you. Moving on to the next one. After graduation, public service loan forgiveness program, is it still available?
I'll take that one. So it is, and I'm really focusing on the word graduation. So for students that have graduated, it will still be available. For anyone that borrows a loan after July 1st, then it would no longer be available. So there's two really nice charts from NASMA that we're going to send out after this webinar that will give you the flow chart of the repayment plans and also just an overall repayment plan chart that explains it all for you.
Thank you. And then the next one is, what are the professional degrees that are accepted?
So that one too, Jessica, we're going to send out a chart. We thought it
Oh.
was best because it's
Yeah.
it's a pretty big list.
What are the, do we have a clearer definition of legacy borrowers?
Okay, I'll take that one. So, legacy or a grandfathered borrower is a student or parent borrower who is temporarily protected from certain OB3 limit changes because the student received a federal direct loan dispersed on or before June 30th, 2026. And the student remains enrolled in the same program at the same school. So this temporary protection lasts the lesser of 3 academic years or the remainder of your expected time to complete the degree, whichever is shorter.
Awesome. Thank you. After July 1st, where should our institution be with OB3 at that point on July 15th to ensure compliance?
So, Kim, if you want me to take that one.
It's all you. You love the policy.
Well,
Policy stuff.
even prior to July 1st, right, your institution should have all your academic, your student finance policies updated. You should be working on that today. You could be awarding 26-27 awards already today. As a matter of fact, at Portico, we have schools that we have already processed and disbursed 26-27 award year aid on. So the time is now. You need to meet internally with your counterparts in the other departments. Make sure you understand, if you're term-based, what those add drop periods, schedule changes, how it impacts the students, and you might want to tweak policies there. If you're a school that allows students to drop classes or add classes throughout the entire semester, you may want to rethink that with your academic team, because now you're impacting your students' loan aid eligibility. So I wouldn't wait until July 1st or thereafter. I would start now. Make sure your policies are updated and make sure your students are informed. Hopefully, if you're on the Portico system, you would have already seen the ISERs, the new ISERs. If you're not, hopefully you can still see that in the system that you have. Make sure you understand what the ISER changes, how it impacted your students, and what they look like now. Be prepared. That would be the message.
Great, thank you. The next question is around the schedule of reduction proration with regards to less than half-time term and at least half term in an academic year.
Yeah, I'll take that one. So this one's a little tricky. FSA hasn't been completely straightforward about how we are to deal with the less than half-time enrollment to date. So what we do know for sure is that we cannot make a disbursement in a term that we have determined at the point of disbursement that they're less than half-time. So nothing's changed there, right? We're all used to never giving loans for a less than half-time enrollment. But it does appear to be true that the credits from that less than half-time term can be shifted to a later term in the academic year if there is a subsequent term in the academic year. So the SOR percentage would be increased based on those less than half-time credits that they took in another term over the course of that academic year. So they can't get a disbursement in the term of less than half-time, but they can get the other terms increased, their disbursements, based on those less than half-time hours. Stay tuned. As soon as we hear something concrete from FSA back on that, we'll make sure that that gets spread around.
And just to add to what Sarah just said, with the first term in the academic year, there's still an open question around, can the amount be greater than 50%? We've heard no, we've heard yes. So in a situation where the first term, the student's taking at least half time, and the second term, they're taking less than half time, how, if the student goes over 12 credits, as an example, in the first term, can you really pay the full amount? We don't know. It's an open question. Right now, within the core system, we're defaulting to the 50% rule in that first term. After the first term, you can go above 50%. So keep that in mind as your packaging is as well. It's another unknown that could impact this answer.
Great, thank you. The next question is, what are the areas of OB3 that will impact non-term HIL and NCD schools?
Okay, I'll take that one too. So for non-term programs, really the main thing that's not you're not going to have to deal with a non-term program is the SOR. So that's a great yay for everybody that only has to deal with non-term programs. So non-term though would still need to abide by the association between non-federal aid and the COA being covered, whether or not they'd be eligible for Pell. They'd still have to keep in mind the Parent Plus annual and aggregate limits that would exist, that it applies for non-term programs. Lifetime limits, hopefully none of your students are reaching lifetime limits just during a undergrad non-term program, but it is still in place. And then, of course, if your school decides to set any institutionally determined annual limits, those would apply as well if you did choose to set those for your particular institution and program.
Great, thank you. The next question is just Pell Grants. How does OB3 affect Pell Grants?
I'll take that one. All right, so for Pell, OB3, as you heard at the beginning of our presentation, Shauna mentioned Workforce Pell, so that's a new program, and we also learned that it's voluntary, and that's separate from what we know as the regular Pell Grant that is currently awarded to students. So starting in 26-27 award year, a student cannot receive Pell for an SAI of 14,790 or more. Also, students receive non-federal grants or scholarships, which include state grants and state scholarships, institutional grants and scholarships, private and outside scholarships, athletic scholarships, and other non-federal grant or scholarship assistance from states, institutions, or private sources that cover their full, not their Pell COA, but their full cost of attendance are not eligible for Pell, even if they meet Pell requirements. I think that's it
And
for
so
Pell.
the one thing I would add to what Armando just went through, and he did a great job of outlining the 14,790 SAI value, that if the student has that SAI value or higher, they won't be Pell eligible no matter what other flags are on their ICER. The key thing there is that that number is twice the max limit. And I'm making that distinction because in 27-28, if the Pell amount changes, then this amount also changes. It's always twice the max Pell amount. If the student's SAI equals to or greater than that, they are not Pell eligible. So just wanted to add that.
Thank you. And I believe also the question has some information about Plus. And so Grad Plus is eliminated for new borrowers for new periods of instruction beginning on or after 7/1/2026, unless the student qualifies for that legacy grandfathered protection. Parent Plus is not eliminated, but OB3 adds new borrowing limits. So Parent Plus capped at 20,000 per year and 65,000 total per dependent student, unless the student has been grandfathered. And for Parent Plus loans after 7/1/2026, those are limited to standard repayment and generally lose past friendlier repayment options. So look up and keep yourself informed on repayment options for Parent Plus loans. Thank you.
Great, thank you so much. Next question, how do we hold students to the lifetime ag limit if we can't trust NSLDS to be accurate?
All right, I'll take that one. Well, ideally, NSLDS should be correct. It should be accurate. However, my recommendation is to look at the loan detail, making sure that all of that information appears to be correct. You can work some manual, calculations. Um, and if the loan detail record does not appear to be correct, then I would recommend calling NSLDS to inquire to resolve. But for the most part, NSLDS should be accurate.
Great, thank you. We have another one that has a couple different pieces to it. So how do you prorate loans with academic years who have who have terms less than full time? How are we awarding mid-academic year grade level increases? Will those be prorated based on the credit term the student earns the ability to receive the additional loan, or will it be based on the total credits being attempted in that academic year?
All right, so I'm going to focus on that mid-year grade level increase because we've already talked about SOAR. And you can go back to the handouts for anything you need to know about SOAR in general. For the mid-academic year grade level increases, we haven't gotten concrete information. It's, again, one of those things that could change in the future. But currently, we've been told that we'll treat those term increases based on single term calculations for that additional amount that they'd be eligible for. So here's an example. A freshman student that's attending fall spring, a normal freshman sub would get $1,750 in fall and $1,750 in spring. But if they advance to grade level 2 in the spring term, they would be eligible for an additional $500 in that term max. So that's the difference of $2,250 minus $1,750 is $500. So what if they're attending less than full time in spring? So now we have to apply the SOR to spring enrollment just for that $500 increase. I'm not going to bore you with all the math, but basically you're looking to find the SOR percentage for just that term. Once you arrive at that percentage using the $500 increase, you would apply it and then you'd end up with your additional amount for the grade level. I know that was a lot, and you might need more information than that. If you do, you can reach out. But the key takeaway is you're just looking to increase for that one term what they normally would be able to get, and then you would base your SOR on that additional part.
Thank you. How are community colleges going to handle the SOR changes with continuous enrollment changes?
So I'll take that one. So best recommendation is, of course, is always keep your enrollment updated. If you're using the core system, you want to make sure that you are updating your hours, your credits earned, depending on what type of school programs that you have. So you want to make sure that you're always keeping your enrollment updated. That's going to be key. It's always key. And we're also going to be implementing a loan adjustment queue, similar to how Pell intensity works. So you want to make sure that every term that you are managing that piece with your SIS system, and that's how the continuous enrollment changes will be managed by us.
Thank you. Our next question is about legacy provision tracking in Portico.
All right, I'll take that one. So Portico's tracking legacy by combining loan level first disbursement dates, the program identity, the enrollment continuity, LOA documentation, and a system flag that looks like kind of like a ribbon. It's a green ribbon. And you can find that in the student details page of the core system, alongside the enrollment information section on the right-hand side under actions. So if you hover over that ribbon, you'll see a pop-up note appearing that says OB3 grandfathered, and that's until set date. So whichever is the lesser of the 3 academic years or the student's remaining time to credential based on the data that has been provided to us. And so who qualifies for that? So one of the following has to be true, and that is a student was actively enrolled or on an approved leave of absence in their program as of June 30th, 2026, at least one direct loan disbursement, subsidized, unsubsidized, or Grad Plus, was made before July 1st, 2026. The student has not withdrawn or ceased enrollment on or after July 1st, 2026, and the student is still within their expected time to complete their credential.
Yeah. And so just to piggyback on that answer as well, Armando, this is another policy area that you want to pay attention to when it comes to LOAs. And if you're allowing students to go on LOAs for extended period of time, like 180 days, they could come back and fall out of the grandfather period just because of that LOA period. And so those are the types of discussions you should be having internally as well.
Yes,
We
thank you.
Oh, you're fine. We also have some video walkthroughs of some of the OB3 functionality that has been added to core. I know that this is one of them. So we'll just make sure to include links to these video walkthroughs so that you can see what it actually looks like in core in the email follow-up to this webinar. Next up, without finalized regulations and clear guidance from the department, I'm anticipating that we're going to have a lot of rework to complete packaging students for the 2026-2027 award year. Do you have recommendations for managing or prioritizing the potential increased workload? What does core have planned to assist schools with repackaging quickly and accurately? And do you have suggestions for how to present this information to students in a manner that is simple, clear, and de-escalating?
Kim?
I'll take that. So we've had many conversations internally on this one because in the past, if you've been with Portico long enough, you know that we try to make it as easy as possible. So in the past, when we had Pell changes, we ran a script on the back end. We always are going to look for ways to make it easier for you. So we are exploring basically running a script for those existing students that have already been scheduled for the loan proration. The biggest piece around that, and I think Rasha touched on it earlier, and maybe even Shauna, is that scheduled units within the core system is so important. And I know we have a lot of schools that have an integration, so that may not be as impactful of a statement. But for the schools that don't have an integration with us, or maybe they do, they don't update the system as often, it's really going to be key to make sure that that information is accurate. That loan adjustment queue that we spoke about is also going to be driven off of that schedule units section in core. So that's we're definitely exploring it, and we'll have more to come on how to help you.
Great, thank you. The next question is about issues specific to graduate students, especially repayment plan options for new students versus those who qualify for limited exceptions. I think there is an OB3 repayment plan chart that we're going to be sending out after this that will cover that, unless we have anything else that we want to speak to. But I think that the chart will cover it.
Yeah. Yep.
The next question is grandfathering the legacy window with 100% with 150% SAP rule.
Okay, I'll take that one. So SAP 150% maximum time frame rules, those operate independently of the OB3 loan legacy provisions. So legacy rules allow you to keep the previous borrowing limits. But as soon as they reach that 150% with the SAP maximum, the federal aid stops. They're out of it. So neither one can interfere with the other one. So the legacy exception is only valid for the lesser of 3 academic years or until they complete that program. If the student hits their 150% SAP limit during that window, the legacy allowance cannot override it. It is a hard factor. Federal aid will cease for that student.
Great. Next question is about calculating loans for each semester for students who are not enrolled in full-time status. So learning more about how to navigate drops, additions, et cetera, with calculating loan eligibility would be helpful, which I think we've covered in a prior webinar. So we should.
Yes, I definitely was going to mimic that, Jessica. We definitely have webinar slides. So if anyone needs that individually, we can definitely get that to you. Again, echoing enrollment updates, that is key. Also, you can I would recommend submitting a revised funding estimate, because the funding estimate will do the work for you once you enter those revised credits per term, and it should give you your new calculations.
Yeah, it looks like we have a couple people who are interested in those slides. So we'll just make sure to include that in the follow-up email as well. All right, we are running low on time, so we have a couple more questions that we're going to get to. If we did not get into to your question, or if you dropped your question in the chat today, we're still going to work to answer those. And then we're going to share that out probably later this week or maybe next week to make sure that everybody's questions do get answered. We also have a follow-up session to this one on July 15th. So we highly recommend that if you found value in this Q&A, sign up for the one in July. That will be post July 1st. I think there's going to be a lot of questions that are still circulating. So we'll include a link to register for that as well. So the next question there are 2 new loan totals showing in NSLDS, total OPB, and lifetime maximum loan total. They're usually different. What is the difference? And which one do we use to determine remaining eligibility?
Okay, so this is another layered one. Looking at time, I'm going to simplify it and just say the total OPB is what the student has borrowed that they haven't repaid yet. It does not include interest. If a student starts repaying those loans, then the total OPB will go down based on those repayments. The lifetime maximum limit, that's new. That's the new OB3 limit. This is everything that they've borrowed over the course of their career as a student. If they are repaying any of those loans, the lifetime limit does not reduce. This is a big picture of everything they've ever borrowed, and that's what you would base your total overall limit on. When you're determining your ag limits, you don't want to look at the OPB. That's never what we want to do, because that's including plus loans that the student may have borrowed. So when you're looking at ag limits, you want to look at the aggregate principal balance that is shown on the dashboard. And then you can do your calculations based on the maximum minus what they've got so far. What else did I want to say about this? Also, of course, with the lifetime maximum loan, we want to make sure we're not exceeding that. So first, make sure you're nowhere near that. And then after that, you can determine your ag limits.
Great. We're seeing a lot of people who are interested in those slides with the loan calculation. So we are going to be sharing those to everybody. You will have them. We will send them to you. Don't worry. And then our last question for today is SOR in regards to withdrawals and R2T4.
Okay, am I take? Okay.
Wait. You can either one. Doesn't matter.
It doesn't matter. Go ahead.
It doesn't impact the R2T4 rules.
Yeah.
That
Those
was
were
hopefully the
short
easiest
and
one,
A
sweet.
but
shockingly
sure.
short one.
Those
I know.
short and sweet.
I think there's going to be a lot more questions around that come July 15th,
Yeah.
because you don't have a lot of drops for 26, 27 yet. So I can see
Yeah.
the July 15th.
SOR impact the eligibility. So what is the student eligible for? And that's the amount that gets put into your R2T4 calculation always. So the calculation itself isn't changing.
Great. Thank you, everybody, for all of your questions. Thank you, everybody, for joining. We'll see you next time.
Thank
Thanks,
you.
everybody.